Hey, how's it going? First post on TradingView. So excuse me if I'm a little bit rusty, but yeah, I'll give it my best shot. I'm currently on GJ 4-hour chart, as you can see here. And where we are at the moment, the price is currently on a retrace, but I'm going to start price back here at this support level. As you see, price came down, found support once again. That's the second touch there, followed by the third touch here. And as you can see here, indicated with my trend line, classic divergence example on my screen of the divergence. As you can see, lower low, lower low, lower low here, but that's a higher low. Opposites, divergence, that's what it is. And then what I've backtested lately is that throughout divergence, this is a bearish divergence setup. Once price completes its divergence setup, it usually comes back down to and retraces and retests the last lower low, and that bear candle right there is its last lower low. Institutions are selling to buy, and they need to mitigate their sells. So as you can see, they brought price back up. Price is rallying, 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 making its way slowly up to this resistance level right here. And at that resistance level, you can see just absolute complete manipulation. Retail selling, institutions taking out liquidity indicated with that wick. Retail stop losses are here, here, all around that area, followed by their buy stops to recover their losses if price was to intend to go further up. And institutions know this, they take out their liquidity, because if everyone's selling the market, it just don't go that way. So if retail want to sell and institutions want to sell, they're going to take the retail out because they have the money to do so. And they don't want to lose, they're the banks. So what they do, take out liquidity before selling the market. And what they've done there is mitigation, indicated through that yellow circle. So what they have done is that they buy into retail sells. So they're buying, buying, buying to take out liquidity, and then they open a sell order, so they're hedging their positions. So they are selling now with an open order of longs still in the run. They are selling, making bank, but their longs are in drawdown here. So what they need to do is mitigate their longs and get them out of break even, which they do right there by the wick. So break even here, take profits there. Price comes back down, retraces on resistance, found support. So support level here. And then as you can see here, this is retail mentality coming out in me. Downward trend line, resistance level here, all throughout that level. Downward trend line, hitting that downward trend there. Found support, come back up, touches the trend line again. Bearish candle, resistance goes. That is confirmation for me, considering one, there is a resistance level there. It touches it, retraces, comes back up, hits that trend line, comes back down, hits it a third time. Retail are thinking, I'm ready to sell this motherfucker. They sell the market. Institutions go, ha ha ha, you guys don't learn. They buy, take out all liquidity, stop losses above here, above here, above here. They take out all liquidity, because as I've said here, if everyone is selling, it just doesn't work. Okay, so they take out liquidity and bring price further down. And as you can see here, by bringing that candle up, a lot of retail traders that missed out on getting wiped out here, they would be like, oh, okay, so maybe it isn't sells, it's buys. So what they do is they buy here, but retail want to bring institutions want to bring the price down. So retail are buying here, going, oh, I was wrong down here and down here, so it's actually a bull market. They buy, but they were wrong again, and institutions sell. So price comes down, comes down, comes down, and through that first breaker block candle, that is an open position of longs. So they are in drawdown through that. So their long positions here are open before they hedge against their position and sell. So they are making absolute cabbage off this one here. They are selling, 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 while this one is in drawdown through those sells. So what they need to do is, what happened here is mitigate their longs. So at the open of their position of their breaker block candle, they need to get out at break even, and that's what they have done here. But I still feel like they need to come back and test it again. Reason being, through what they have done here, classic divergence again, lower lows, lower highs, lower lows, lower highs, and as you can see, opposites. And what I've back tested is that the last swing on a bullish or bearish divergence setup, the last swing before the run of an opposite towards the opposite direction. So in this case, it's the last bearish swing before the bull run. Price needs to come back down most of the time and retrace and retest that last lower high. So that's pretty much a breaker block. So institution selling to buy. So what they do, open order to sell to buy. Take out liquidity, take out all the liquidity, all the stop losses. So they take out liquidity here, come back and mitigate their shorts there at break even before bang, bringing price back up. So what I intend price to do next is to mitigate their longs here. And if I zoom out a little bit further, here's another classic example which I noticed earlier. More divergence, but on a higher time, on a higher period, like higher scale, I should say. So high, even higher high here. So higher high here, higher high, lower high, opposites, yeah, divergence. And then what I've said the last two times, it's just pretty much a breaker block, and that's what it's done here. That's the last higher low, so the last swing before the big impulse move, the last swing before the impulse. So what they need to do is come back and mitigate their longs. So as I said earlier, trend line down previously, trend line down, retail selling here before, boom, big bull run to take out liquidity. So they took out liquidity, bring price down, took out liquidity here, brought price back up, and now they're just going to hit that that higher low and that breaker block. And what I intend price to do next is to hit that level and retrace down to this support. That lower support, that is just a pool of liquidity. So many orders are there waiting to be filled. Institutions see that, they know that, they want to take their money. That's what they do. They're the banks and hedge funds. And you know what banks like to do? They like to take everyone's money. So it's no difference, nothing that we don't know. Sorry about this. Let me give you another area of confluence where I think matters. I like to use the Fibonacci tool quite a bit for entries and take profits. So I like to put mine from wick to wick. So the highest high to the lowest low of an impulse move or a swing, as you could say. So start it there to my lowest low, and what it does, get this, it comes up and hits the 0.705 level to the fucking T. And that is an area of importance to me personally. So that's another area of confluence. And I like to take my profit at minus 27 or minus 618. And look where that 618 is. Come on, like that is the liquidity right there. So that is where they want to go, and that I believe is what is going to happen. But you know, I can't predict the market. I'm just going to go with it. And whatever comes at me, I will trade it with the best of my knowledge. But that is my analysis. Hope you enjoy. Hope you like it. There's more videos to come. So yeah, enjoy the rest of your weekend.